After such high hopes for business and markets after Donald Trump's election, things have settled down quite a bit, I think it's fair to say. But is there still room for some upside surprise out of Washington? Steve Wieting of Citi is still with us, so is there?
I think that you can't rule out that there can be surprise from Washington. Politics is surprising all the time. And I think that what markets have become used to over this half year, that nothing can get done, suddenly when something gets done, it's a much more substantial surprise. So if you think that the impact that tax cuts, potential trade issues, all of these positives and negatives, depending on your perspective, had from November through January, all of that is faded out of the marketplace. And so it's a very, very small notion in the marketplace, a small risk that there will be some substantial U.S. fiscal stimulus, for example. And it could change things. It could come, and it could be a much more substantial surprise. Doesn't mean that the probability is, as high as it was. It seemed to be at the turn of the election. It doesn't mean that the size of any package is going to be really move the needle very much, but it's now priced out of the market.
So what's going on in Washington is almost like catnip for journalists.
Yes.
But what about for investors? What about for business people? I mean, are they spending much time focused on what's going on or not going on in Washington?
I think that there is just considerably less focus on it. I think that the good news has been that the world economy was more resilient, stronger, in fact, and that interest rates, exchange rates, all of these things that could be moved by U.S. policy, just less disruptive for the world. And so the focus has moved on. Now, again, we could come back to it, but we're not going to have the kind of disruptive and incredibly positive effect on domestic economic activity and disruptive for the rest of the world because we've scaled back considerably the scope for action.
Here's what I don't get, though, is after President Trump was elected, it was go long equities, short treasuries, and buy the dollar. We've seen the trade for the dollar and treasuries reverse, but not for equities. How do you explain that?
It's different kinds of equities. And again, small cap, domestic focused stocks, companies with, very high tax rates. Have not been outperforming those of low tax rates. Companies with large amounts of overseas cash, have not been performing any differently. So these sorts of metrics tell us that we have substantially priced out, and much more so. The exchange rate is telling us that we've priced out, U.S. dominance type trades based on, some big fiscal plan.